Hello, my name is Jeff McTagg, and welcome back. This is the 12th installment of my series on what I know to be the best mutual fund selection process you'll find anywhere. Today I want to introduce you to mutual fund selection traits numbers 10 and 11, return last bull and return last bear. Why are these numbers important? Investors, that is your clients, they focus on bull market performance with hardly a glance at how well the funds hold up in a bear market. However, how funds hold up in a bear market is almost as important as how they perform in a bull market. Remember, the bull market giveth, but that damn bear taketh away. Simple math can elude even your more intelligent clients. They assume if a fund loses 40% during a bear market, it'll make it back up with a 40% gain. Of course, that's not true. Fund losses require even greater gains just back to break even. So it begs the question, how often do funds that hold up well in a bull market or perform well in a bull market, how do they hold up in a bear market? To answer that, I lean on return last bull versus return last bear. Now, I did my first analysis of these bull-bear returns in 1999. I broke all funds from each investment category into performance quartiles and focused just on the top quartile performers. And in that survey, of the funds that finished the bull in the top quartile, only 14% of those bull market performers produced top quartile results in the bear. In fact, in the equity income category, there were 53 funds that finished the bull market in the top quartile. But only one fund stayed in the top quartile during the bear market. Now, I've continued to repeat the research every couple of years, 9 studies in all. Lipper changed category names and descriptions in 2010. Here is the chart through year-end 2016. So 2010 through 2016. I had surveyed almost 4,000 domestic equity funds. And as you can see, of those that finished the quote-unquote last bull in the top quartile of their category, only 13% finished in the top quartile, then in the last bear category. However, 36% of these top performers produced bottom quartile results in the following bear. On the flip side, of the funds that finished in the bottom quartile of last bull returns, 17% repeated bottom quartile performance, while an amazing 44% of these worst bull returns produced top last bear returns. Okay? So the intent of traits number 10 and 11 is to help identify all-weather funds. Now, that does not mean that they make money in both bull and bear markets, but rather that they give back less of it during a bear market. And I know you want to know who these all-weather funds are, but to get that information, you're just going to have to subscribe to my website, Active Fund Strategies. But that's it. Now you know the 11 traits that are factually backed to be used in the fund selection process. So now that you know the traits of success, how do you use this proven data to select mutual funds? I find that many mutual fund focus lists suffer from a distinct lack of why these funds. Raise your hand if you feel that way. Come on, tell the truth. And I'm always amazed at the volume, the sheer volume of data and information that services like Morningstar offer. You know, if you need to know what the fund manager's oldest daughter's name is, you just might get that from Morningstar. But I also find that volume of information to be overwhelming. How do you sort through so much data to form an intelligent opinion of conviction? So I wanted something short and to the point, something to complement Morningstar, a process that would display a comparison of all funds within a category using these 11 traits. And I knew if I could set that up, it would allow you to accurately refine your focus list and offer funds with greater conviction on your part and a greater buy-in from your clients. Now, I've made these comparisons since 1997. The finished product is my mutual fund report cards. In the next webcast, I will show you the report cards, and you will discover just how you and your clients may benefit from them. Once again, thanks for watching. I trust you learned a lot, and the time you spent will benefit both you and your valued clients. I hope you will join me for the next webcast entitled Creating Mutual Fund Report Cards. Until then, this is Jeff McTagg reminding you, unless you can prove it, it's just your opinion.
Right here, right now, right here, right now.